Welcome to Legal&Tax Services, and thank you for choosing us.
So, a lot of people in this time with their financial distress are considering what expenses are important and what aren't. And one of them is things like repayments of loans and repayments of or payments, should I say, of your insurance premiums. What are the repercussions of not paying at the moment, and what can people do in order to try and cut the costs in these avenues if there is even an out? And I'm going to extend the question to you just so that you can maybe answer this as a holistic question. Some policies offer something called credit life insurance. How does that apply, and does it apply to everyone, and how do you claim? Maybe you can give some insight.
So I'll start with the banks and the Banking Association. I must say that at the start of this pandemic and the lockdown, all the banks were very proactive and came together and offered almost like premium holidays to all of their clients. So if you haven't spoken to your bank, every bank unfortunately has a different plan. They're not all the same, but in general, all the banks have offered some relief to those clients who have outstanding debts. So it's very important that, just like your landlord, you go to your bank and you open up the conversation and you tell them what your financial position is, and then hopefully your bank will be able to offer you the best type of plan that they have available. So if you are not able to pay your debt at the moment, the credit life insurance, basically, if you have taken it out, at the start of any credit agreement, the option is given to a consumer. It's not automatic. So the same with your landlord issues, where you're going to have to look at your lease agreement. You're also going to have to familiarize yourself with your loan agreement to see whether you did in actual fact take out credit life insurance. Credit life insurance is almost like cover for your debt obligations in the event of a certain life event, like your death, a disability, an illness, which prevents you from obtaining any income to be able to pay your debt. The other one is unemployment. I think unemployment would be the biggest reason for wanting to take out your credit life insurance in these times, because obviously with retrenchments, that's also going to play a role into that. But like I said, if you have credit life insurance, what helps if you are, say, retrenched, then basically your bank will give you almost like a premium holiday for up to 6 months, depending on your bank, depending on your policy. So that allows you for 6 months to not pay towards your debt. And it also allows you to see if you can actually get alternative employment. If at the end of a certain period, some policy says that basically that insurance will kick in, and then your debt will be written off, if I can say that, paid up. So if you do have credit life insurance, then that's a good option to look at. If you do not, then this is where you're going to have to see what type of option your bank has for you. The only thing is, with most of all the premium holidays that have been offered by the banks, even though you're not paying your monthly installment, interest and fees are still running. So once you are able to start paying back, you are going to unfortunately look at a situation where previously, say your installment was 100 Rand, maybe at the end of that premium holiday, you're going to start paying 300 Rand or 400 Rand more to catch up on all the arrears in terms of interest and in terms of fees.